Hey everybody, welcome back to Life Be Life, and where we talk about stuff that affects us financially. So this is part 2 of the 50-year mortgage conversation that I started in last video. If you haven't checked that out, go ahead and check it out. We read through this article and I started to go through some TikTok videos in order for me to get a little feel of what the streets are saying. So let's go ahead and dive into some more.
Everyone's talking about the 50-year mortgage, talking about how bad it is, but I see things a little differently. If you're just finding me, I'm Samantha. I help people make smart home buying decisions. So here is the part people are missing with the 50-year mortgage. Very few homeowners actually keep the same mortgage for 30 years. Most people refinance, restructure, recast, move. So the point of the 50-year mortgage isn't to keep it for 50 years. It's about affordability. A longer term can make a home more affordable for someone. Just because it's a 50-year term doesn't mean you can't make extra payments. So is the 50-year mortgage for everyone? I don't think so. But it can be for the right homeowner if you do it strategically. Make a plan. Have a time to refinance. This can help you get into your home.
I'm convinced on a couple of things, right? Either one, people are just so predatory where they don't care about other people's financial situation to where they just want to sell, or, have money in their pockets via you to go and pay for their services for these advisors. Or two, people just regurgitate whatever is told to them, because this sounds very familiar compared to the last one that we seen in the other video, right? How can you see such a situation to where the buyer is going to pay just about another house in interest and be like, oh yeah, girl, it's okay. Like, at least you got a home. That's not good for the buyer. Even the 30-year mortgage is pushing it, to be honest. To be having to pay something for 30 years. I mean, now it's kind of common because everything is a subscription based now. So basically you're paying stuff for the rest of your life until you decide not to use that service anymore. But sitting and allowing someone to come from a 30-year to a 50-year, knowing that their interest payments on the principal is going to multiply double, basically double, it's crazy work. And for you to come on the internet and keep on regurgitating the same talking points, which clearly doesn't make any sense, clearly does not help anybody but yourself, but your pockets, is insane, is diabolical. And a lot of people, unfortunately, do not have the discernment to figure out who's lying, who's telling the truth, who has their best interests in mind. Because for someone who doesn't know anything at all about real estate or purchasing home or being on home ownership, when you come to videos like this that are quick and you hear this, the only thing you hear is the part that is good for you, right? Because that's all she said, to where, oh, you'll be able to get into a home. But when you put the math together, the math don't be mathing at all compared to if you do have to rent, okay, for a little bit. But going into a 50-year mortgage, it's never a good idea at all, because at the end of the day, you could get into a 30-year but pay it off in 15. You'll have to put more down per month, but the goal is to not overpay for the house in interest rates, right? So how can you confidently come to somebody and saying, oh, 50 years is fine because at least you'll be able to get into a home? Like I said in the last video, there's no shortage of homes. So if anything, the idea now is making sure you're financially stable to where throughout your life you're not struggling, and at least at the end of your towards your retirement age, you'll have a little something in your pocket in order for you to live off of. Getting a 50-year loan doesn't do that, because if you're getting a loan starting at 30 and you put 50 years onto it, you're paying into your 80s. You're going to be house poor. And what they're trying to advise is like, well, you do save what, 200 literally every math number I've seen, people have only saved about $200 a month. Saving $200 a month in your loan, in your mortgage, compared to having to pay double in interest at the end, doesn't make any sense. And they're trying to peddle this whole, or we're not going to stay, no one stays in their home for 50 years. Okay, what if someone does want to stay? Be very cautious with sales salesmen who are trying to show that they know something, which they really don't. Do more research. Don't allow TikTok to be your research. Go actually do research. Go actually run numbers. Go and actually read articles, multiple different articles, to see what the situation is really about. Because once you have someone like her coming online and showing you a quick 10 seconds, giving you what you want to hear, and then saying, oh, contact me and we can work on it, you're going to be going in losing money. To be honest, you're on the path to lose money. This ain't it. This ain't it. And this is the second video I've watched, and it said the same thing. So clearly these advisors, quote unquote advisors, want you to fall into that trap, wants you to get conditioned into thinking a 50-year is not that bad. You could get into a 50-year because you'll be able to qualify. You'll be able to have a home. No, having a home is not the deal. Being able to afford a home is the deal. Having a home is not the deal. There are different places people can sleep in. Having a home is not the deal. Being a homeowner is not the deal. Being able to afford it comfortably is a deal. Let's watch another one. Let's see if they all saying this, because this is ridiculous.
For that payment, is there any way you can put more money down? I can barely do the 5%. Right. If it wasn't for all these companies buying up houses and driving up prices, then us home buyers wouldn't have to compete with corporations that turn thousands of homes into rental homes. Excuse me,
Hello.
I think I can help you with your problem. How? We're now offering a 50-year mortgage. Since when? Which means your payment would drop about $200. But over the 50 years, the customer would pay an extra $500,000 in interest. You'd be in debt your whole life. I think you're onto something. Really? Yeah, but instead of 50, can we do a 100-year mortgage? What? That would drop my payment even more, right? Let me calculate that real quick. You can't be serious, are you? That would drop your payment an extra $100. So you'd be paying $2,000 a month. And we'd be getting paid $2 million in interest. That's still too high. Thank you guys anyway, though. Wait, what if we did a multi-generational 500-year loan? Your payment would be $950. And we would be getting paid $5,300,000 in interest. We are not gonna be here. Deal. Now I know how my parents felt to have a mortgage payment under $1,000.
Saw something about the potential to have a 50-year mortgage.
The 50-year mortgage thing.
Yeah. What do you think about that?
Okay. First things first. Here's my thoughts on that. What do we have? We have a housing problem, right? Mm-hmm. There's really only one reason for this housing problem: supply and demand. We just don't have enough housing. We have a shortage. Very simple. So trying to say that, hey, I'm going to stretch your payment out to make things affordable, I don't think solves that problem. It doesn't bring about additional supply of homes. And number two,
can I argue that it would even make it worse because you have more people in the market to buy them? So more demand.
Exactly. You're very good. Now you learn economics.
Yes.
Supply and demand. You are basically messing around with the demand side of the supply and demand curves, right? You attacking the demand side, not the supply.
We need to fix the supply.
And here's your problem with 50-year mortgage, right? Okay, your mortgage, LO, right? You know this, right?
I am a mortgage.
15. Okay, what's the pricing of a 15-year? How different is a 15-year mortgage from a 30-year mortgage?
A lot different,
right? So imagine a 50-year mortgage and a 30-year mortgage. Interest rates are going to be higher. Number
expensive.
one. Number two, right? It's going to be much longer for people to gain their equity, to build their equity, because what happens in the mortgage, right? All the interest is front end loaded. So you're going to keep making your payments and payments and payments, and your principal is going to go very, very little portion of your interest. Remember, mortgage interest is always front end loaded on a consistent payment stream of a fixed mortgage over that period of time of the amortization, right? So people are going to take longer for them to pay their equity down, right? To me, if you ask me, and ironically, I am on this side of the fence. I'm a banker. This is good for bankers and lenders. Right. It's just another tool for them to make more money, right? So the bottom line is this, like, if you think this is going to help affordability, think about it from supply and demand, right? You're driving up the demand. What happens when you drive up the demand, leaving the supply as is?
Houses get more expensive.
Things get more expensive. That's it. That's what I think it is.
I agree.
I don't know why, and he's a banker. I don't know why people keep on thinking it's supply and demand. We have plenty of homes. I've said this in the previous video. We have plenty of homes. It's not supply and demand. It's literally what the other guy, that first video that we watched, is literally what he said. Whereas people are hoarding and people are keeping and people are holding until value goes up, and people are not selling at a lower price because they want as much as they can. And salaries are not keeping up to the prices that people are keeping these houses at. It was real simple. I don't know why he keep on. It's not supply and demand. For me, I personally don't think it's supply and demand at all.
Here's a 50-year mortgage. It's kind of nuts if you think about it, but I'm not going to say it's a terrible idea. Here's the problem with it. The problem is that you're paying a lot more in interest. But I want you to think about this for a second. If you look back 20, 25 years ago, the max you could get on a car loan was about 60 months. A brand new car was 60 months. What's happened is that products outran our income. So they went to 72 months and now 84 months. So they've stretched those limits because they had to in order to sell cars. It's basically back to the same thing there. Houses have gotten so expensive. This is a way to get people in home ownership. The ideal situation is you get a 50-year mortgage and you pay a 15-year term. Basically, you calculate a 15-year payment on it and you pay that every month. And if you have problems, you go back to paying the 50-year mortgage note. If you pay it in the 15-year mortgage, it'll pay off in 15 years. So I would say if it helps people get ownership, do it. Your appreciations continue to go up faster than if you were just sitting there paying rent. The appreciation side of it, let's just say you pay 5% interest on it, 50-year mortgage, and your property goes up in value at 7 or 8%. You're gaining value every year as you hold that property.
Oh, Lord. I have to write my notes down in order for me to keep up with this lunacy. All right, first thing he said was, he gave the example with a car 20, 25 years ago where what he said, the price of the cars outran the income. That's literally the same thing that is going on with housing. So like I said, it's not supply and demand. But you cannot tell me all you have to do is just, if you want to pay in 15 years, just pay in 15 years, and then that's it. Do you really think the banks are not going to change the contracts to where they're locking you in for a certain period of time? For example, if their loan is 50 years and they know out of a $400K house, in 50 years, you'll be paying another $400K in interest up until I think like $500,000 in interest. Why wouldn't they want you to stay locked in for they could take double of the amount for one purchase? Do you not think these banks are going to have a clause in their contract to where they're going to be like, well, you cannot finish in 15 years. You cannot finish in 30 years. Minimum, you could finish in 40, 45 years. They're probably going to give you a little bit of leeway. But do you think they're going to sit here and be like, yeah, go ahead and pay it in 10 years. When they're over here salivating and rubbing their fingers about thinking they're going to eat. And imagine how many people who cannot afford homes will take that 50 years thinking, oh, okay, I just need to put in extra hours in order for me to bring my mortgage down to 15 years, to 30 years, and not fully pay to 50 years. Another thing you have to realize, a lot of people, they get very complacent in where they are, right? So if they're paying $2,000 a month, let's say the average, let's say 2,800 a month for their home. A lot of times they're not going to go in and try to pay more in order for their mortgage to hurry up and finish. A lot of times people get very complacent because if they're already paying such a high mortgage monthly, you think they're going to really want to put their extra money into paying down a house, especially if they know in their mind they have 50 years to pay it off? Of course not. People would get very complacent. They would rather put their money towards a vacation, put their money towards nails, their maintenance, put money towards food, put money towards a new car every 2 years, put money towards anything else but paying down a home, which in their mind, 50 years is so far out anyway, so they're really not going to pay attention to that. They're really not going to put the importance on that. Just the same way as a lot of people that I know still have student loans, and they've been out of school for over 10, 15 years, and they haven't paid down their student loans at all, and they're not trying to be honest, because they know like, it's far out, whatever, it is what it is. I'm just gonna do the minimum. The same thing when it comes to everything. How many people that you know have credit card debt and literally just pay the bare minimum? Same thing with a mortgage. Why are we so optimistic about the financial literacy of Americans? You guys see how the school system is. A lot of times, a lot of schools don't even have personal finance classes in grade school. I was one of the lucky ones that actually had it because my school had money, had a lot of money. So I had the Dave Ramsey curriculum in one of my classes in high school. But a lot of people don't. And a lot of kids are not going to pay attention in high school when it comes to economics, the basics of economics. And a lot of time they're not teaching them anyways. So you think once they get to adulthood, when they have no other choice but to get a 50-year loan because it's the norm now, just like 30 years is the norm for us, you think they're really going to sit here and try to pay it off? You have to literally pull teeth to teach people about their personal finances. Even though we have a plethora of information on their web, there are a lot of people who still don't know how to balance their books, still don't understand savings, still don't understand Roth IRAs, still don't understand 401ks. And you think once the 50-year loan becomes a norm, people are going to just be like, yeah, I'm gonna pay $4K a month instead of $2K a month in order for me to bring this principal down. Absolutely not. And another thing, he said, your house is going to be gaining value over time. When will the threshold stop? Because we're in 2026 and a lot of us still cannot afford $1 million home, right? So if the average price of a home is $500,000, but a lot of us can't even afford that $500,000, where is the threshold where is the ceiling going to hit? Is the housing price going to be infinite? Is it going to be a time where we're paying $1 trillion for a home, for a one-bedroom home, for a one-bedroom condo? Where is this really going? Because it seems like each leader that comes into office, they don't want to have a recession under them. So they're doing everything in order for something not to crash. But we need some of the system to crash in order to restart, in order for us to be able to have new people come in and try to gain wealth, try to gain something. This is just, I don't know.
So if you're 25, newly married, and you get a 50-year mortgage, is your recommendation take 50 years to pay it off?
No, I don't think you should sit in a 50-year mortgage. I think that's stupid. But it's a tool. So it's like, I look at mortgages not as a godly or an ungodly thing. It's just a tool. Just as much as a gun is not godly or ungodly, it can be used ungodly, and a mortgage can be ungodly. But you should jump into that mortgage, get into the market, and then as finances increase, as life changes, you don't make the same amount of money at 21 that you do at 31, unless you're kind of a loser. But if you're able to buy a house and you're willing to take that step forward, you've got initiative. You're a young man that's trying to build something. So you're going to get promoted in your job.
Who told you that? You see, these people are going off of, what's the word? Antidotes. Who told you you're going to get a job increase? Who told you you're not going to sit in a 50-year? Try to take the least risk when it comes to these type of things, because all of those are not guaranteed. You could probably say something like that, 20 years ago. Oh, yeah, you're just in your teens. You're just in your 20s. Your salary is going to increase. You're going to... But nowadays...
Donald Trump just hard launched the idea of a 50-year mortgage. Baby, they are selling you the trap as a favor. That is some salesy shit right there.
What?
A 50-year mortgage does not make homes cheaper. It does make your monthly payment cheaper because you are paying over the course of a longer term. But because you are paying over the course of a longer term, you are owing way more in interest. If you don't believe me, you can go to any mortgage calculator online. This is easy to find. So I just inputted all the average costs of home ownership right now, November 10th, 2025, into this calculator. Average cost of a home in America, over $400,000. Interest rate, 6%. Loan term, 50 years. Loan term, 50 years. That is crazy. Your loan payoff date would be October 2075. The total interest you would pay, over $700,000. On a $400,000 house, you would pay $700,000 in interest. Meaning that you would pay overall, over the course of your loan, over buying a $400,000 home with a 50-year mortgage, you would pay $1.2 million. And let's be clear, pitching this idea isn't about helping buyers. It's about protecting home prices. It's about feeding Wall Street. And it is making sure that the housing market never has to lower itself to meet your actual paycheck. Because lowering prices, regulating investors, building affordable housing, those are solutions. But in America, we don't do solutions here. We basically just remarket debt. And yes, you 100% can pay off your mortgage ahead of schedule, ahead of the 50-year term. But in reality, most people will not. So congratulations, you're not a homeowner, you are a long-term customer. And while I don't think Trump is actually gonna go through with this, because what he tends to do is toss out ideas, kind of see what his base thinks about it. And I think he's getting a lot of backlash over it because people can do math, simple math. You never know.
Nah, at this point, he could possibly go through with this, because if you think about it, it helps the people that he deals with, the banks, all the Wall Street people. It helps them. This is more money in their pocket. This is easy money in their pockets because people need homes. And do we have a choice? No, we don't have a choice a lot of the times, unless some big reform or some big riot happens, or, something really big happens, which I feel like in the States now, people are very nonchalant when it comes to getting pushed over by the bully. But no, I'm at a point where I would not be surprised if he actually goes through with it. Even if he has people in his corner that are not happy with this decision, even if his base is not happy with this decision, there have been times where his base are not happy with something and he still continues with it. So I will not put this past him at all. But for sure, exactly, I agree 100% with what Aja Ding said, to where this is sales, sales, sale. But then we have people at the beginning of this video and at the ending of the last video who is trying to make it sound normal, make it look normal, try to condition you to think this is okay. Because at least you get into a home, at least you're gonna be a homeowner. You guys are aware not everywhere puts so much emphasis on being homeowners, right? In Dubai, where I live, they don't care if you're a homeowner or not. All they care about is the fact that you can afford it. They don't care if you're renting. They don't care if you're homeowning. They don't care. As long as you can afford it, you're good. But US puts so much emphasis on, oh, well, if you're renting, like you're a nobody, you have to be a homeowner. That's the prestige of the prestige. And then people go into debt trying to be these titles, homeowners, landlords, whatever the case is, and get burned. So now y'all thinking 50 years, and the first one, he was being, dramatic, saying 100 years, 500 years. But to a point, it can't get like that because they're going to try to keep the housing prices high instead of breaking it down to what everybody can afford, the masses. It's very clear and it's very simple. It's very to the point, but a lot of people, they don't want to. Lack of financial literacy and being able to be conned easily is going to be the death of America, and greed. But greed is everywhere.